Okay, so before we start the session, let's do some very quick Q&A. I think all of us are experienced investors here. We have seen enough wealth getting created, especially in the small cap space in the last 20 years. So let me just put up a very pop kind of a question. What is the small cap IRR in the last 20 years, right? So we all have invested, created a lot of wealth, but do we know the IRR of the index? I'm talking about Nifty Small Cap 250, Nifty Small Cap 100. As we know, these indices have been around for almost 20 years. So what is the IRR for these indices? Sorry? 18. Okay, we have one answer from this side. How about the back? 17. Okay, we are getting close. Anybody else from that side who wants to guess? Sorry? 15 plus. Okay. 18. What else? 16.5. I'm going to give it to him because he is closest. The answer is actually 16. Okay. So I'll give you the exact number. Nifty Small Cap 250, which is the index which is existing from, I think, April of 2004. It's been around for almost 22 years now. And the index has delivered 16% IRR. Right? And that is just the index. And what have active funds done? 20. So, mota 2, 3, 4, 5%. So, Indian small cap is a rare asset class in the world which has given you 20% for 20 long years, right? And therefore, we believe it makes a lot of sense to be invested in small cap. And that is why this session, we're going to talk a lot about it. But before I go, just last question. If we keep compounding at 20% for 25 years, what does it become? If we keep compounding at 20% for 25 years, let's say you start at age 25 or you start at age 30 and you go on till, let's say you are 55 or 60. So 25 years of compounding in small cap, hypothetically, I'm not saying 20%, but let's say anything compounds at 20% for 25 years, what does it become? Very broadly, 100 times. Yeah? So 20% compounding for 25, 26 years, somewhere around that will become 100 times. Another way to look at it is if something compounds at 25%, it becomes 10 times in 10 years. So 10 times in 10 years and then another 10 times in 10 years. That's the power of compounding much above the market average. And ladies and gentlemen, that's what this session is all about. So let us start the session now. And let me just take all of you through some very potent arguments about... Okay, let me start with this slide. Yeah, okay. Let me start with this slide. As you can see here, there is a monumental change in the landscape of Indian small caps in the last 5-6 years. And what has been that change? Let us look at this. In June 2020, as we all know, first 100 stocks are large cap, which is 27,000 crores and above was 9 lakh to 9 lakh crores. The mid cap, which is 101st stock to 250th stock, was 7,000 crores to 27,000 crores, right? And just now look at this side. June 2025, just 5 years, the small cap definition is 10,000 crores to 30,000 crores. In fact, if you look at the latest data, this number is 35,000 crores, right? The January data. So what has happened is in 5 years, small cap has become 9 lakh crores, or market cap has become almost 5x, 44 lakh crores. And even mid cap has become almost 4 times, while the large cap has become only 2.5 times. So today's small cap is no longer the company that we all used to be a little iffy about. I know 8-10 years back, we used to think small cap companies are weak companies, poor accounting quality, fly-by-night operators, we couldn't trust them. But today's small cap is a company with an average market cap of 20,000 crores. If it has an average market cap of 20,000 crores, it means it has at least 500 crores, 1000 crores, 1200 crores of profits. And a lot of these companies are number one, number two, number three companies in their own field of operations. It's just that as per the AMFI classification, they are classified as small caps. So in our view, this change in landscape makes enormous opportunities available for investors to come in the small cap space, because this space is now very well researched. There is new ideation which happens at a very rapid pace, and not just by Indian standards, but even by global standards. A company with a $2 billion, $3 billion, $4 billion market cap is very investable, because a lot of research and information is now available on that. Yeah. So that's my first point about why small caps make a lot of sense. Let us talk about the ideation, right? So this is a chart which shows you what is the kind of ideation available. And this is my favorite part about my job. As a fund manager of a small cap fund, I am normally one of the first few people to meet the most dynamic, smart entrepreneurs who are running innovative niche new companies in India. As you can see in this chart, last 5 years, 70 small cap IPOs. This year, I can tell you, I have met at least 10 companies in the last 2 months, the first 2 months of this calendar year. And there are at least 30, 35 small cap IPOs lined up for this year. So what I'm saying is, if you want new ideation, if you want a new blood, new companies coming in a very, very dynamically and fast growing Indian economy, small cap makes a lot of sense. Let's talk about something which is very important from a growth perspective, right? So there are several themes in the Indian market which are represented in much larger allocation in the small cap space. So let us look at the returns of the market in the last 4 or 5 years. So what are the sectors which have done the best in the last 4 years, 5 years? Sorry? Banking is one. What else? Capital market. Okay. Auto is last 1 year, but before that, I'm talking about 3, 4 years. Pharma. Sorry? Wood. Defense. Engineering, capital goods, defense. This is a sector combined, everything put together has 6% weight in Nifty, 6.5%. And how much weight does it have in Nifty Small Cap 250? How much weight does it have in Nifty Small Cap 250? 18%. So it is no surprise then when CapEx, infrastructure, engineering, defense does well, the small cap index will do well or Nifty will do well? Small cap will do well. Similarly, if you ask about all the EMS companies, all of them except one belong to the small cap space. If you look at all the solar power, wind power companies, all of them belong to the small and the mid cap space. If you look at all the battery chemical companies, all the auto ancillary companies which are catering to the transition from ICE to EVs, you will find most of them in the small cap space. If you look at real estate as a sector, except one company, most of them are in the small and the mid cap space. Which part of pharma has created biggest wealth in the last 5 years? Sorry? Diagnostics. And what else? Hospitals. Except one hospital company, all of them are small and mid cap company. If you look at CDMO, right, contract research and manufacturing company, except one name, all of them are small and mid cap companies. So what I'm trying to say is that in a very rapidly growing economy like India, where several new parts of the economy are doing well, you will find the faster growing parts of the economy being present in much larger allocation in the small and the mid cap space. And therefore, small and mid cap is now front and central. As an equity allocation, our house view, Mirae asset house view is you have 60% large cap, but you need that 40% small and mid cap to make sure that you're participating in the full spectrum of equity opportunities. And that is why we believe, and if you combine these things with what I started my presentation with, which is that the index itself has given 16%, the active funds can actually do better. And therefore, of course, not every fund will do well, but there is a big opportunity, right? So then what is really that we are talking about? How do we take care of the volatility in the market in the last 18 months that we are seeing. Just a very, very quick word on Mirae Asset Small Cap Fund. We launched our fund in January of 2025. And I know I got several messages to me at that time that congratulations, you have made the peak of the small cap market, right? And you know there was a big collapse in the small cap space. And it was indeed a very, very challenging year. But happy to say that despite the benchmark being zero returns or flattish in the last 12 months, Mirae Asset Small Cap Fund was able to deliver a 13% absolute positive return in a very, very tough environment. So what I'm trying to say is this, that even in tough times, by virtue of bottom-up stock picking, by focusing on ideas, it is possible to create significant alpha in the small cap space. Whether you are able to do that or not on a continuous basis, of course, is a separate question. But the point is, because you have such large number of ideas, it is possible for alpha to be generated meaningfully in the small cap space, and therefore all the more reason to be present in active funds in the small cap space, right? A very important point about, I think, let me come to the most crucial slide, is this, that how is the tide looking for the small cap space in the next, let's say 4 to 6 quarters. So let me just ask you something. We all remember 2024, right? When did the market peak in 2024? September 24, right? And September 24 was the lowest in something. What data point made it slow in September 24, just as the market was peaking? Can I ask you that? What was that data point? Which we track every day, or which we track very regularly?
What is?
No. Macroeconomic data point.
Why you like that?
No. No.
I open interest.
No. GDP. So this is most ironic. GDP growth, if you remember September 24, we made the bottom of GDP growth at 5.5%. It was a shocker, right? So let me give you the whole story. 2024 was a year where things were not going that great. We had the election results, which were a little below expectations. We had GDP growth slowing down. If you remember, interest rates were going up. Earnings were also slowing down. But the market was in a very confident, jubilant mood, and the market kept on going up. 21, 22, 23, 24, 25, 26,000, right? And then what happened? When the 5.5% GDP growth came in, things started changing. We had the biggest change. What was the biggest change in November of 24? What was the biggest change?
Space.
Sorry?
Yes.
Yes. Trump was one. I'm talking India. We had the change in stance in monetary policy. We had a new RBI governor coming in, and since then we have seen what? 125 basis points of repo rate cut. Then we saw in the budget of last year, February 2025, we saw 1 lakh crores of tax cuts. Then the government realized even that was not enough to turn around the economy. Then we had 2 lakh crores of GST cuts. Then, of course, there was one thing that the market always wanted, which is the trade deals. First with EU, then with US, right? And then what did we started seeing? Actually, from March quarter last year, GDP growth 7.3, 7.4, 7.5. And come to Q3 of FY26. How are the quarterly results this time? Excellent. Best in 8 quarters. So this quarter, Nifty 500, let me give you a broader universe. There is a 13.5% profit growth for Nifty 500 universe. If you adjust for the one-time labor code impact, the growth is actually 16%, right? But market is not in a good mood, right? Market was not in a great mood in 2024. So subpar election results, slowing economic growth, slowing earnings, tight monetary policy, market kept on going up. Now we are in the exact reverse of that. earnings getting better, GDP growth getting better, monetary policy easing, fiscal policy easing, trade deals done, but somehow the sentiment has not turned, right? What we are saying is, in the short term, the sentiment trumps the data. It did it in 24, but sooner or later, the data will catch up. And what we are saying now is that the data is turning for the positive, and we think it is important not to ignore the data in this noise that is all around us. So I would just, this is a very busy slide, but I'll just like to say one thing. In 2025, small cap index earnings was minus 5%. Next 2 years earnings CAGR is 17%. This is the time when the small cap index bottomed out at 25% lower from the peak it hit in September of 24. And I think as the market starts pricing in this earnings growth, we will see much better times as compared to what we have seen in the last 2 years. When it will happen, I don't know. It is almost impossible to know whether it will be this month, this quarter, next quarter. But I know of one thing, that the earnings will turn. And when the earnings will turn, markets will start rewarding the small cap space. Now, what are the risks or the caveats to this? We should always know the risk. I think domestically, things seem to be in a great shape. We have a cyclical uptick, which is only going to get stronger. Tomorrow, we will have the new GDP. I think it could surprise on the positive. People are talking about 8% GDP growth after a long time. So that is very much possible. And we believe that the next 2-3 quarters, the domestic growth is going to actually surprise on the positive. What are the risks? Risks, of course, you all go home today after me giving such a bullish outlook, and Trump starts bombing Iran. So then all my scenario comes to naught. But then we live in a world where geopolitically things have been tough for last 2-3 years. There is another terrorism-related incident in India, and India-Pakistan go to war. Things can change again. Tomorrow there is a fresh problem with trade, tariffs. We'll have a problem. Crude goes to 90, stays there for a month and comes down, we are okay. Crude goes to 90, stays there for 6 months, we will have a problem, right? So these are the risks. But domestically, we believe we are in a sweet spot. Growth is coming back. Inflation is well behaved. Earnings are definitely going to catch up. And therefore, we believe it's a great time to be investing in small caps. And this is the year we believe we should increase allocation to small caps. But, there are always caveats. What are the caveats? Coming to small cap, please have a 5-year view. Do not come to small caps, unless you have a 5-year view. And second, be ready to see a 30% drawdown at any point of time. This is my 20th year in the market. I have seen at least 6 corrections of 30% plus. And every 3-4 years down you will see a 30% correction. In fact, September 24 to the bottom in April 25, it's almost 25% correction from peak to trough. And several stocks have corrected 50, 60, 70, 80%. So volatility is par for the course. It will happen. We should be able to see the volatility through. But I believe very, very strongly that small cap is a great way to create long-term wealth. I have a 8-year-old daughter. When I save for her, I save only in small caps, because I know I'll need the money only 10 years down the line. Maybe when she's 18, she wants to go to college and I need money at that time. So in the next 10 years, I know there will be at least 2 or maybe 3 30% plus corrections, but it will be okay, because this 16% compounding that we have seen in the index has happened despite this 30% corrections which happen every 3-4 years. So, the small cap space, the final word from me, is full of opportunities, but we should keep these 2 caveats in mind. Please come with a 5-year view and be ready to see a 30% drawdown. How much to allocate? If you want to allocate 100 rupees to small caps this year, please put 50 rupees down right now, and the remaining 50% you should look to spread out over the next 6 to 12 months through SIPs or various other forms. That was my time. Thank you so much for having me here. Thank you.